Okay, everyone, a wonderful Tuesday. I hope you are somewhat doing well. The crypto crash is not completely devastating for you. And yeah, you are still focusing on the bright side of life because there's way more to life than just looking at crypto prices. What we're going to address today in today's Twitter space, obviously, we want to discuss the reason for this massive crash over the last 2 days. Obviously, we're going to address the issues that Celsius may have. We're going to look at how we are structured entirely different at Cake DeFi and how we want to be really, really solid for our customers. I want to address, obviously, the title, which is, are we going to go through the 200 weekly moving average? And I mean, we broke down, but the weekly candle hasn't closed beneath, which is kind of the critical thing that has never happened. Obviously, a lot of companies have been discussing about letting people go, BlockFi, Coinbase, Crypto.com, and so on. So want to address that as well. And then let's see if we have any other of the great topics. We're doing this update every Tuesday, 6:30 local Singapore time. And yeah, I also always have my co-host here, our head of community, Fabio. Fabio, how's it going?
Not good, Julian. It's bad. It's really bad. No, look. Something I want to start off with is you. If you're on Twitter, you're reading all of these people, the OGs that have been in crypto since 2013 and 2017, and that have already been through two bear markets, and how good they are in holding on to their positions, and that you need to buy now, and that you never sell in these kind of market situations. But let's be honest, like at least for myself, this is my second bear market, and I feel terrible. I feel depressed. I feel sad, and there is the shoulda, coulda, woulda that is in my brain that it says, oh, if you would have sold at 65 and you would have bought just now, you have 3 times as much Bitcoin. And then there's this whole other section like is this it? Or is crypto never coming back from this? It's looking really bad. We have a very bad macro situation, and all the media is jumping on it, and so it feels terrible. There's no other way to describe the current market. How are you dealing with these emotions or with the negativity of the frustration that we are feeling right now, Julian?
Yeah, I don't know. I don't know if I've just always been someone who, I don't know, feels a bit of less emotions um in dealing with these markets. I think I mentioned this in one of the episodes. I lost all my money in 2008 because I was super emotional, and I don't know, for some reason it feels like uh this kid that got massively burned when these emotions come up, and then this really stupid decision making with some really stupid execution followed that financially completely devastated me. And I don't know, since that moment, it feels, yeah, it's my body or my entire kind of being is when it feels like it goes into this mode where emotions come up. I don't know, there's this massive pushback. So it's like this, I don't know, this reaction. If you're scared of something, for example, or you had this super negative reaction from something, then yeah, this I don't know, that you get this pushback, and so for me, I don't experience much of this FOMO when prices go up. I don't experience much of that sadness or depression when prices go down. I do also like want to say that, for example, I don't look at my like crypto worth or my total net worth at all right now. Like I think the last time I looked at it is like in March or something, and I haven't looked since then. Um, and yeah, sure. I mean, people can tell me, why don't you do it? I mean, you're kind of lying to yourself. And like, yeah, you're right. But I mean, I decide over how often I update my kind of net worth, right? Just because you're updating it on a hourly basis or on a minutes basis or on a daily basis or whatever, you're looking at your net worth, right? Because you have a portfolio open or something, doesn't mean that I need to do it at the same kind of speed. I can update once a year, maybe, right? And so if I look on an annual basis, it looks entirely different than looking at it on a day by day basis. So I don't know. I'm just someone who doesn't who probably doesn't feel that as much. Of course, I mean, I do see the super devastating stories and the crazy feedback, and obviously, I wish the markets were like way happier right now. But I mean, the flip side to that is, I think we've discussed this a lot on the show here, that a lot of that shouldn't be actually all too surprising. I don't think from everything that you have listened to over the past, I don't know, I think we started that show right in the massive kind of bull market in September, and I think we've been pretty spot on in kind of yeah, cautioning people during the right moments, encouraging people to the right during the right moments. So as a on a bigger picture here, I don't think it was all too surprising. But I mean, if we just kind of summarize the recent events, I think yeah, we've seen this massive correction now down by almost 20% in just 48 hours. And probably there were two trigger moments. On the one hand, it was that moment where the entire, I'm sorry, I'm driving home from the office, so if you hear the car screaming in the background, it's just because yeah, Singapore traffic sometimes is a bit crazy. Um, uh, if we summarize this in two kind of key moments, obviously on the one we have the Celsius story. We're gonna dig into this, and that obviously got a lot of people totally insecure. Additionally, it also caused some forced liquidations, and that definitely helped, or not helped, but made the market sell off a bit worse. But then there's this other story where, especially yesterday over the weekend, the Fed surprisingly, completely surprisingly, came out and said, yes, I know in the past we talked about raising rates about 0.5% in June, but now there's a very strong probability that we're actually raising 75 basis points. And some people are even like mongling that it could be 100 basis points, simply because the inflation data was so dramatic last week, 40-year high and so on. And both together, I think, just completely surprised the market. Um, and yeah, that's where we are standing here a bit. So yeah, again, I don't know if you see any other kind of trigger events, and then let's dive a bit deeper into some of these events. I don't know what else you hear from the influencers. I would love to then talk a bit about some key levels, right? I mean, the title, the 200 weekly moving average. We have the story on Sailor getting liquidated at 21,000. Obviously, he didn't get liquidated, so or it seems he didn't get liquidated. But I don't know if you see any other kind of trigger events, Fabio, that kind of caused that push down to almost to the old all-time high at 20,000.
Yeah, so there is a few things that people are talking about. One thing is the Sailor liquidation or MicroStrategy liquidation. There is a lot of people that say that 21K is the level that he needs to put in more collateral. Like he made a tweet, I think a month back or a few weeks back, where he publicly stated that the level where they need to add collateral is at 3,500. So this is him saying that, and he even posted a whole presentation. I think on page 21 or 22, MicroStrategy they state that their level of where they need to add collateral is at 3,500. So I just give him the benefit of the doubt there. It's a publicly traded company. He's probably not lying to us. But there is on social media, everybody talks about this 21,000 level. And of course, right now, you could say there is a hunt for big liquidations. So there is public knowledge, for example, that Celsius has locked up a few Bitcoin on Maker Protocol, and it's public where the liquidation levels lie. I think they were at 20-ish something, then they posted some
Yeah, originally
collateral.
at 22,600. Yep,
Yeah, yeah.
22,600. That was the original level. Yeah.
And they added collateral, I think last night or yesterday. I'm not 100% sure, but the new liquidation level is, I think, 17,800 or 18 something in that direction. And of course, you could think that there is this big hunt going on where big players say, hey, there is somebody we can liquidate. So I guess the hunt for these levels is on. And also you have a convergence of the old all-time high and the 200 weekly moving average that is right at the current levels where we are right now at 22,500 or so. Of course, the old all-time high would be a little bit lower. Yeah, there's many different theories. I saw an update from Benjamin Cohen yesterday, and he said, look, if we break through the 200 moving average, we are going right to the 300 moving average, which currently sits at 16,000. And this is also, by the way, what happened in March 2020. We broke the 200 weekly moving average and we went straight down to the 300 weekly moving average. But of course, before the week closed, we were going right back up. For me personally, like when it comes to fundamentals and Bitcoin itself, I'm not worried about Bitcoin. Like the fundamentals didn't change. It's still tick-tock next block. Everything runs the same as it used to, and it will run the same tomorrow. What I'm more worried about is the macro environment, the levels of debt that we have in the system, the Fed pushing rates up. These are the things that worry me a little bit more than the things that happen inside the crypto space. Of course, that we also have a kind of a bad news week, especially if you're participating or if you were a customer or still a customer of Celsius Network.
Yeah. Maybe let's kind of dive into each of those things and then kind of break them a bit apart. Obviously, first one, general macro setup, right? I mean, we've been kind of having this macro setup, I think, for the past 7 months. Not all too surprising. The tendency has always been the same. It's just gotten a bit worse and worse and worse. Obviously, we still have the Ukraine conflict. We have now, for the very first time, a bit of talks that China is kind of rattling their sables with Taiwan. I mean, this could just be some fear mongering again, but I mean, we see that. Obviously, inflation not coming down, inflation still peak high. So a lot of this uncertainty. Then we have the consumer confidence level, which is record lows. I'm not saying all-time lows, but really, really, really low. And so that just means that consumers are just really, really cautious about actually spending money right now. And I mean, just think about yourself, right? I don't know how much money you have on the site, but if you have like a large expenditure that maybe 7 months ago you were like, oh yeah, sure, I can buy a new kitchen. Oh sure, I'm gonna buy a new car. Oh sure, I'm gonna, I don't know, go on holiday. And sure, I'm gonna go into the 4-star or the 5-star hotel and not on a 2 or 3-star hotel. Oh sure, I'm gonna fly business class and not economy class. And now suddenly a lot of people sit there and be like, yeah, you know what? Let's delay that vacation a bit. Oh yeah, I mean, I don't need that new car right now. And so on, right? And so a lot of that obviously always translates into what's actually then happening in the economy, because people kind of really have a bit of a liquidity kind of squeeze in a sense where they're really struggling a bit there. So that's kind of the economy. And then the Fed comes out and says, hey, we're raising interest rates. June 1st, since June 1st, the dollar has actually been deflationary. You can actually look at the numbers. It's the first time in a super long time that the dollar has actually not been inflationary, but deflationary. And so we're feeling this right now, right? And I posted it on Twitter. Obviously, people all crave cheap dopamine and they crave cheap dollars. And we kind of see this at the moment. And I think it's a bit of a new setup for everyone. And then this like big uncertainty around the Fed update tomorrow. Their meeting is today, Tuesday, and then tomorrow, Wednesday, 2 p.m. Eastern Standard, they're gonna make that announcement on how much they're gonna raise rates. And the market is really kind of maybe a bit surprised that it could be 0.75% and not 0.5%. And I talked about this a lot of times during the shows. This kind of example of interest rates being like gravity. So the higher interest rates, the higher gravity. And so it's just way harder for prices to go up, just like it's harder to jump when gravity were to go up, which on Earth would not happen. But I mean, just as the kind of image. And so that key to understand there is just kind of that weight that lies on everything, right? And I kind of gave these examples so many times in our past shows, which is always the circumstance really always defines a lot of how the reaction to then other events are, right? And so I always gave this kind of relationship example in the past, and the summary of that is always just imagine your relationship with your partner, your wife, your husband, whatever, is super awesome. Like you are peak relationship status, everything is fantastic, you trust each other, everything is outstanding, like no reason to kind of doubt your partner and so on. And then let's say you see I don't know, a weird message on the phone, right? I don't know, maybe from an old friend or something, and that pops up on the phone, and you, by coincidence, you're not checking the phone, but by coincidence, you see this. Well, if you have like super perfect relationship, you wouldn't care. Like you may make a snappy comment, or you're like, hey, who's that like douche writing to you still or something, right? But it would be like a snappy, easy comment. It wouldn't have a serious impact on your relationship. Zero. But obviously, we can imagine this, and with the flip side, imagine the relationship is already super shaky. You're like, you're not well, you mistrust each other, and then this message comes in. Obviously, completely different impact on how maybe that day is gonna go, right? I mean, we can all relate to that. So the same is actually happening in the markets. So we have this really horrible setup already. Market is really not trusting kind of the entire setup. And then you have a story like Celsius coming in. And I want to be very clear here, right? That story with Celsius coming in, it actually at the moment, it doesn't mean much. For like just to kind of get the facts here straight. Celsius announced on Sunday evening US time, Europe it was like pretty much midnight, Asia here it was Monday morning, that they are stopping any withdrawals. They were quoting the terms and conditions that they're doing this in order to help the entire community. So, I mean, it's according to their terms and conditions that every customer accepted. I don't know. I mean, it means nothing, right? I mean, Binance stopped withdrawals yesterday. No one thought that they were kind of insolvent or something. So, I mean, we have had withdrawal delays on our platform. For various reasons, sometimes because the blockchain had issues, or because I don't know, it was a long weekend, or it was Christmas, whatever, right? So nothing like out of the extraordinary. But in this case, it completely blew up, and it blew up because Celsius had already quite some story going into that event where people were like, "Hey, you guys lost like ETH." Um, the staking ETH with Lido, that's not really backed. You have issues with Terra, you don't have all the funds, you're actually insolvent, and yeah, people should actually withdraw their funds, you like go for the bank run and so on. And so with that announcement, that kind of really blew stuff out of proportion, and it really kind of took the crypto fear to another level, because now suddenly all the bets were off, and we still don't know, right? Over 36 hours later, we still don't know what's actually the story here. Is Celsius truly insolvent? So insolvent means liabilities higher than assets. And so that means people are either going to lose all of their funds, or they're going to have a massive haircut. Or are they just illiquid? Illiquid means that they can actually pay out, but they're just not, the funds are not liquid right now. So they need to be juggling around. Maybe they have margin calls they need to cover. And we don't know, right? So we don't know the facts there. We don't know what's really kind of the reality at the moment. And here I also want to highlight, right? The reason we have, for example, set up our company Cake DeFi, transparency. People can track and trace the funds. They know exactly where the fund flow is going. They can see all this. They see the rewards. They see all the utilities. There's no black box, right? Complete transparency. That was on very intentional. So something like that could not happen at Cake because people could actually track and trace everything. But so kind of adding all this with Celsius is causing a lot of havoc. And then you have companies like BlockFi, Coinbase, Crypto.com. I mean, all of them are announcing layoffs. People are talking about that they don't have enough funding, that they may not last during the winter. BlockFi has announced that they need to raise funds at, I think, a 25% valuation of their last round, right? So they're doing a 75% discount in comparison to their old round. That's just, if you think about this, right? That means you have people who just a couple of months ago invested, I don't know exactly what it was, $4 billion or something, or $3 billion, and now they're raising at 750 million. I mean, it's just incredible, right? The uncertainty. Then suddenly you have obviously a lot of employees that are getting fired left and right. Coinbase not approving people during their probation. And so all this adds together. And that at the end caused to this massive, massive, massive uncertainty where people were like, okay, when are we going to get liquidated? Who's going to get liquidated? Who's going to liquidate first? Are we going to hit the 200 weekly moving average? Yes, we do. Oh, it's shut down. Oh, we are going under 21,000. Oh, we're getting close to 20,000. When is Celsius going to get liquidated? When is Sailor having to top up or getting liquidated? Is Elon Musk going to sell? Who's going next? Right? Then we hear these stories from partners that were using Celsius. There's this one company called Nuri in Germany that said, "Hey, we are a partner of Celsius. We are being affected by this." And then many other partners. I'm expecting still a few companies actually going to come out and they're going to be affected by this. And so that's where just a lot of this uncertainty is coming from. And I want to be very clear here. I think righteously, there's just a lot of fear. And so if you're sitting this here right now, this doesn't mean that fundamentally stuff has changed, but a lot of fear by a lot of participants. And at the end, price is always coming from the buying demand and the selling kind of pressure. And at the moment, there's just a lot of people who want to get liquidity. And there's just a lot of people who sit on the sidelines and say, hey, I would have a lot of liquidity, but I'm just a bit scared. I don't know exactly what's going on. Yeah, so that's kind of a bit of a summary and kind of digesting that a bit. Did I miss anything from your side, Fabio? Do you feel, I don't know, anything you want to add there, that we need to go down the rabbit hole a bit deeper?
Yeah, I don't know. It's for me the whole Celsius story is. I really feel the pain there because I'm a customer as well, and I have some funds there, and I know a lot of my friends and a lot of people in the crypto space are affected. I think they are the biggest, let's say, lender or CFI services provider in the space. And I really like sometimes I get a little bit sad and depressed because so many people are jumping on this with a very negative tone. They see, oh, I told you so, and this is bad, and it was so obvious that this is going to happen. And I completely disagree there. It's for me, it's actually it's very sad, and I have still a lot of hope that this is not the end of the day. You made the example, or you said one of the things that could be or is that they're illiquid, and I personally really hope that they're just illiquid. They are moving a little bit of funds around. They're doing something in the background, and they will open up again. It's probably going to be affecting the company in a negative way because you're losing a little bit of trust, especially like what I personally would wish for is a little bit of better communication. If I go to the Twitter account, they don't really give us insights in what is happening and when they're trying to open up again. This is personally something I would really love to see. But in moments like that, the thought or the uncertainty and the doubt is so overwhelming because it comes from every direction. As you said, people are talking about, yeah, Elon Musk getting liquidated, Saylor getting liquidated, Celsius getting liquidated, and it just, it's like it never stops. There is always something else that, and now we have the Fed meeting coming up, and it's not just 0.5%, but it's very likely going to be 0.75. So all these things, they kind of pile up, and it seems like such a big mountain to overcome with no end at the light of the tunnel. But this is exactly how I felt in 2018 when Bitcoin dropped from 6,000 to 3,000, or in March 2020. It just seems so hopeless in the moment when it happens, and then at one point it eventually turns around. Like the biggest fears I have is, like I mentioned earlier, is that I really get the feeling from the Fed they are super committed in raising the rates, in fighting inflation, and I think personally they will just continue until something breaks. Either they're going to raise rates like consistently, and the only way that they're going to stop is probably, I don't know, maybe with the midterm elections, or if something is actually going to break. And if you just compare the correction that we are having right now, this is there's an immense speed in this breakdown in public markets and also in crypto. We normally, if you have corrections like this, there are these relief rallies. Julian and I talked about this a few weeks back, that there is a big chance that we are going to see a relief rally, and we have not seen that at all. It's practically just straight down, and oh, it's just it's depressing. Yeah.
One point you addressed, and I really want to add on that point. I would highly recommend you from a personal standpoint, right? And this is just, again, what I have learned over my years in general, working with people, that I tend to stray away from people who are these tower destroyers, right? No matter how justified it is. But the reason is always when you are like surrounded by people who love to see the world burn, who love to kind of really push everything down. These people tend to be people who actually have never learned the skill of building a tower themselves. So the entire skill is only down talk other stuff so that their tower looks a bit higher. And especially in the Celsius kind of story, right? I just want to kind of, for example, highlight a couple of things. I mean, I'm the CEO of a company that is not in direct competition, but obviously we do have some competing services. So I should be there, and I should actually be completely celebrating. I should be completely rejoicing. I should call all this customers stupid. I think that's exactly the wrong approach. And sadly, I see Bitcoiners, Ethereum maxis, I see fiat maxis, I see whatever, any kind of stock gold maxis and so on, who are actually jubilant over fellow other crypto people of a company that, okay, maybe that company didn't make good decisions. I don't know, right? Maybe it turns out that in a week's time, it was really just a liquidity crunch. I mean, I posted this on Twitter as well. I talked about this on my personal channel, that I actually do think that Celsius, like, I was completely not part of that story, or I didn't believe that story, that UST got attacked. I do actually think there's a very high chance that Celsius actually got attacked from that maybe weren't all too happy with how Celsius behaved over the past couple of weeks. And so I actually do believe that there's a major, major possibility there. And so, of course, maybe there were bad decisions. Completely agree, right? But then you have to put, to a certain extent, the value add that this company gave. And without a doubt, that company gave a value add. And so for me, it's just always so in these times, I always look at who are the people who are really pushing the others down. Who's basically that person when someone's on the ground and just goes there and basically starts punching or spitting on that person, right? Because that is where I don't know, okay, great. This is exactly what you would be doing to me if I would be lying on the ground. And I was on the ground, right? And I experienced that myself. And I'm still today, I treat those people that were spitting on me when I was on the ground, and I will never forget that, and I will never forget those people who were helping me up, because, and this is always the key thing to understand, those people that have never learned anything else other than to spit on people and push them down, they have never learned to actually build their own tower. And I promise to you, if you would reflect objectively on those people who are just kind of like bashing on Celsius and is like super jubilant on what's happening, you reflect objectively, you will not find many people among those people who are actually people who build stuff, who actually make the world a better place. Now, they may be talking really smart and they be like pushing everything down, and they may highlight how everything else is bad, but the stuff that they invest in is really, really good. But investing, let's just also make one thing clear. Investing does not add value. What really adds value is the people doing the work where you invest in. Bitcoin itself delivers zero value. It is the entire network, the entire community. It is the miners, it's the companies, it's the nodes, it's the merchants, it's everyone who's actually building stuff that actually adds value. Because otherwise, we can just take the 21 million Bitcoins, send them to the moon, pack them on the moon, and no one would care. There's zero value with just something there. It's the entire network. So it's always the people that actually build something, right? And so as an investor, yes, you provide the liquidity and you provide capital, but at the end, the real value add always comes from the people doing the work. And I mean, Elon is super vocal about this, right? When he says, like, sure, I mean, buying Bitcoin is great, but what really is going to change the world is the companies who actually then work with Bitcoin. It's the people who educate people about crypto, about decentralization, about how this all works. And I've never seen people actually adding value by destroying 60 other things. At the end, you're always going to destroy some value with that. So maybe that's just something I want to add. I was also someone who immediately publicly came out. Nexo, I know, did the same thing, who said, hey, look, I would love to, if there's any solution, I would love to help all the Celsius customers. I want to understand what Celsius needs right now. Maybe Celsius doesn't need anything. Maybe the only thing they need right now is a little bit of time. And that would be great, because that would be the best for everyone. I don't know, maybe they need $500 million. Great, let's talk. Let's talk. How can we work together, right? How can we, I don't know, what do they need, right? And the same with employees. If you are a Celsius employee, and it doesn't matter if you're BlockFi or Coinbase or Crypto.com or whatever, right? I'm sure, I mean, of course, I would love to have great team members, but if you're getting fired there, if you're getting laid off, we have a really great home. Please drop by, take a look. Maybe we have a really good match. We want to help out. I feel there's nothing worse. Like, I really sit there and I feel there's nothing worse than if you want to provide for you and your family, and then the company lets you go, maybe for the right reasons. I'm not saying these are bad reasons, but yeah, there's nothing worse than probably standing there and not being able to provide for yourself and for your family. And I would love to help out there as a company. So these are just a couple of thoughts, and this doesn't apply to that situation. It applies to general life. Yeah, there's nothing, absolutely nothing that's coming good out of people that can only criticize, that can only put other stuff down. Like there will, yeah, these are many times are very loud people, and people like love how disruptive they are, and many times like influencers do this, right? Because it's so interesting. The media does this. There's zero value being added from that, right? So yeah, just kind of don't forget that. And in these times, you kind of see this a lot. So just be extra careful in that. Yeah, I don't know, Fabio, if there's anything you wanted to add there. But yeah, to me, that's an important topic. Do we want to talk a bit about, I think we talked enough about the status quo. Anything we missed out here? Because otherwise, I think we should talk about price levels right now, potential outcomes, what to look for. Yeah, kind of that's a bit of the discussion, unless I'm missing anything.
No, no, no. I agree. Let's dive into the title, Bitcoin breaking the 200 moving average. And it already did. We were already lower than the 200 moving average. And what does it mean? Are we going to hold? So the weekly candle, of course, is decided on Sundays. So everything between now and Sunday, even if we are dropping to 16,000 and we're closing in a wick above the 200, then we would still, like, this theory that the 200-week moving average never breaks would still be a valid thesis. But we don't know yet. We probably are going to need to wait until Sunday. The question for me, where it really comes down to, is we need to ask ourselves. So there's this meme where people say, "Oh yeah, well, I'm going to buy the dip." So right now, I don't know. For example, Bitcoin is at 60,000, and it says, "Oh, I'm waiting for the dip, 30% correction, and then I'm going to buy the dip, and I'm going to scale back in." And there's a lot of people, even though the dip is happening, it dips 30%, 50%. Oh, it will go lower. It will go lower, and I will buy when it is lower. And right now, I think that a lot of people are waiting for lower levels still. And for me personally, we don't know if these levels are coming or not. And personally, and this is just true for myself, not financial advice, but everything around the 200 weekly moving average, if it's 10% above or 10% below, this is great value. Like usually we can just go back into history and look how has it performed, how was it until now. And if you would have bought Bitcoin in the range, 10% range, plus or minus of the 200 weekly moving average, you would have performed amazing. Like these are the best buying opportunities in the whole of Bitcoin's history. And right now, the question we need to ask ourselves, is this time going to be different? And these are like the 5 most dangerous words in the life of an investor. This time is going to be different. But probably it's not going to be different. Probably, or very likely, it's going to be the same as it was in 2018, 2019. It's going to be the same as it was in 2013, and we are going to recover from these levels. So me personally, I added a lot. Yesterday, I converted some fiat into Bitcoin, and I still have a few open buy orders, a little bit lower than the 200 moving average, but personally, I think these are extremely good levels to increase position size.
Yeah, I 100% agree. This topic is obviously one where I think the history is really one of my expertise. I think a couple of episodes ago, I talked about general market crashes and their history, and that's definitely not my expertise. That's just like my faint kind of memory I have on these markets. Crypto crashes, I've lived through many of them. And I mean, I've been in this space now, it's my 8th year. And I've studied this stuff, I think, every single day of those 8 years. So yeah, if this is the same as in the past, right? And so let's just say it is the same. No one here is guaranteeing this. It could be completely different. Then the 200-week moving average has been fantastic for buying crypto. One caveat on this is that it generally does take quite some time until these profits materialize. So what does this mean? Well, if you buy DeFi chain right now, if you buy Ethereum right now, if you buy Bitcoin right now, whatever is your favorite coin and you want to double down on this, I think in the long run, over years, these are outstanding buying prices. But if we just use the past like cycles, right, then it took about a year from the very top until the actual bottom was reached. Now, the actual bottom is impossible to time, so but it's about a year, right? So we're talking about, I don't know, last year, whenever the top for you was, maybe the April was the top for you, maybe the December was the top for you, out of the November, it depends on what you see as the top, but for me, let's say it's November, then you need to be expecting that we may not have seen the bottom yet. Now, if you then, for example, compare this to 2018 or you look at 2014, there wasn't actually so much difference between those last couple of weeks, those last couple of months, right? It was just like, would it make you nervous if you're buying now 22 and Bitcoin drops to 18 or maybe Bitcoin drops to 20? This is just a 10% difference. It's actually not so much if you see this in a large scale, but maybe it gets you nervous. And you're buying now and then it drops to 18, which is like 20% down from here, a bit less, 15%, a bit more, between 15 and 20. If that gets you nervous, then that's a bit tricky, right? Then you have to just be extra careful. And that's also important, until actually the new real run started, it took about another 6 months from that low. So it took about 6 months. And if you compare this, for example, to 2018, the high was in December 2017, hit close to 20,000. The bottom of close to 3,000 was reached about a year later. And then the actual run started April 2nd, 2019. And so that's when the real run up started, right? And that kind of run up had hiccups, sure, but that kind of then ended end of 2021. So it's really, really important to kind of put a bit of perspective to that. And you may be sitting here and saying, oh yeah, sure. I mean, this makes so much sense. I mean, I'm investing for the next 10 years. But then let me ask you the other question. For what time horizon do you think most other people invest? And we would probably all agree that we all think we have years of time horizon, but everyone else has maybe weeks, maybe months. Reality is that many times it's actually us ourselves as well who only have a couple of months. So I just want to caution here, if you have good liquidity on the side, if you have a stable income, stable cash flow, then like no issue allocating liquidity right now. And I think over the next couple of years, you're going to see extraordinary returns from such an allocation. And that is, at the end, what over the long term you want to get. But I also want to caution you that maybe over the next months, there will be more pain. Maybe it's going to be more boring. Maybe there's going to be more waiting. Maybe there's going to be like more confusion. Who knows? But so it's just really, really important to kind of put perspectives into that. And then it takes another 2 years, right? So that's also important always. It takes another 2 years from that low until we actually reach a new all-time high. So we're talking about 2024 here. If we just base this on past cycles, and I'm not saying that they're going to repeat, I'm just saying if we are basing this on past cycles. So is this something you're okay with? Because if you're like, yeah, sure, I mean, I can buy something now, and the next time I'm going to look into this is going to be in 2 years. And in between, I couldn't care less. I'm not looking at my portfolio. I'm doing exactly what Julian just shared. He doesn't even have a portfolio. Last time he looked at his portfolio was in March. I have no effing clue, and I mean this from the bottom of my heart. I have no effing clue what my portfolio is worth in dollars right now. I have no idea. And I couldn't care less. Why would I? I mean, I have no plans on selling right now. I mean, I know myself that my portfolio is down. So, and I don't need the dollars. I have enough dollars. So why would I need to sell at all? So why in the world would I care? It's the same as if you own real estate, you're also not going out to your broker and every single day, every minute, you ask him, how much is my apartment worth? How much is my apartment worth? How much is my apartment worth? No, you wouldn't do that. So it's the same. I don't want to do that either. And so if you can do this for the next 2 years, I think you're in a good setup. However, if you're like, yeah, I'm going to buy now, and if Bitcoin like drops below 20, man, I'm going to really challenge. Like, I see so many questions right now where people are like, Julian, at what price level are you going to sell? And I'm like, dude, like, why in the world? If I bought Bitcoin, if I bought Ethereum, if I bought DeFi chain, if I bought whatever favorite coin you have, if I bought this thing, why would I ever sell when the price goes down? It makes absolutely no sense. I would sell if I would feel this thing has become worthless. And if you really ask yourself if your coin has become worthless, you should be selling anyways, because that just means you bought something that's worthless and you're gambling. I don't do that. I believe I buy value. For me, I believe in these things long term. And it may take me 10 years until I feel now is a great price for me to realize that gain. So that is such a key concept that I really want to give you. And I really hope that people on our platform, we are not an exchange, we're not a trading platform. I really hope that we attract those kind of customers that are long-term focused, the hodlers, the people that say, you know what, hodling is great. Getting cash flow on my crypto makes it even easier. Of course it does. So if you have this kind of mindset, fantastic buying prices. Statistically, like emotionally, I mean, look at the fear index. We're in single digit fear. It's so rare to buy stuff at single digit fear. That means like there's such peak fear at the moment. Then obviously you can look at the average prices. I mean, every little setup here shouts and screams buy. And the only reason why I would tell you be a bit cautious on that is just because you don't know how long it's going to take until prices are actually going to pick up, until you kind of see these emotional states where you're like, oh, great, now I made a good decision. Because otherwise, Bitcoin's going to go down another 10%, or ETH or DeFi chain or whatever is going to go down another percent, and you're going to start questioning your decisions. And then you're going to sell even lower when actually you should be buying because the price went a bit lower. So that is just something that I want to give you. Fabio?
Yeah, like for me, it all comes down. You mentioned this briefly in an internal team meeting just today, and it comes down to controlling your emotions. So the most important thing when making investments is having control over your emotions and not being a victim, and kind of especially what you just said right now, that you are forced to sell in an unfortunate situations when prices are low. And this is like the most important thing that should not happen. So right now, if you think, okay, these are great levels to actually increase my position size, it is not true for everybody. If you have a stable job where you earn a good income and you make more than you spend, and you have some money on the sides, maybe maybe a year, or maybe 6 months, then you are prepared for this. If you don't have a stable job, and if you don't earn more than you spend, and if you don't have money on the side, and you are taking out a loan to increase your position size now, that's probably not the right move to make. And you can really see that if you're on Twitter or on Telegram, there is so many people that are very, very emotional right now because they're probably overexposed. They have a big chunk of their investment and they're underwater right now. And maybe they don't have the preparation that they have money on the side, that they have a stable income. So in these situations, you're practically forced to sell, or your emotions overwhelm you. So I guess it all comes down to preparing ourselves for what might come. And decent markets. So people say, yeah, just hodl and easy, stay calm. Hodling is not easy. It's not. You made that example, Julian, I think a while back, where you said, hey, if you would have bought Bitcoin in 2012, how much would it be worth today? Probably you would have had a loss, because the first time it crashed 80%, you would have sold. And this is exactly the stage where we are right now. It's so difficult. If you look at the market, there is just no no light at the end of the tunnel, and people really think, okay, this is it. And so hodling is not easy. Hodling is actually quite hard. It's like fasting. You practically delay gratification, and you say, I'm not going to use this right now. I'm not going to think about all the things that I could have bought if I sold at the right moment, because I know personally for a fact that every single one of us has to fight these thoughts where you think, oh my God, if I would have sold in November at 60K, I could have bought this, and I could have bought this, and now I could have bought in even cheaper, and I would have this amount of Bitcoin. Like, these thoughts are consistently nagging in the back of our brains, and it's so difficult to turn them off. And right now, for me at least, it all comes down to managing my own emotions. And I talk with my girlfriend about this, and I always say, like, I think I put in the work. So I prepared myself. Maybe this is going to be a longer crypto winter. I have a stable job. I have some money on the side. But these market movements affect me on a personal level, because, and I would be lying if this, like, I don't feel as excited. And like, just if you go back to October or November, the day when we broke the all-time high again, 65,000, and we went to 69K, the ETFs were launched. I remember that day. I remember that evening, all the live streams, all the hype on Twitter. We're going to 100K. I felt so euphoric. It had a big impact on my how I felt and my personal well-being. And the same is true right now. I feel sad and depressed because I didn't sell. I'm still holding on. My money is a lot less worth than what it was, and this affects all of us. So yeah, I guess we're in this together, and I really feel that the best way is to be nice and kind to each other instead of kicking down each other's sandcastles. The point you made earlier, but yeah, it is what it is for now.
Yeah. Yeah. Let's go into a bit of if then scenarios. So to help a bit with the decision making, right? I think everything comes down to emotional control. Any decision that you execute hard on that's based on emotions, and generally emotional decisions are very easy to be executed quite hard on, tend to not derive the outcomes that you intended making the decision. So generally, the more rational decisions are the ones that are also a bit harder to execute on because generally emotions are strong drivers of decisions. But then these generally are a bit better thought through. So the key thing here that I want to get you to is whatever state you're in, you may be actually overexposed to like non-crypto purchase power, then you may actually be thinking, my goodness, should I be buying at these like prices? These are outstanding prices. Like, then buy something. You don't have to buy all in. Take 5%. Buy something. Like, reduce your emotions. The same can though be the exact opposite direction, right? Where you sit there and you be like, oh my goodness, I'm so overexposed. Like, I don't know if I can make the next 6 months and how am I going to pay for this? Well, look, taking out 5% of your total assets that you have in crypto right now is very unlikely going to have a very significant impact on the outcome in the long term. I know it feels like it, but it's very unlikely. So why don't you take a little bit out and see what does this do to your emotions? And generally, these little moves have tremendous impact on your emotions. So that's kind of the first if-then scenario. The other thing I just want to give you is that anyone out there who tells you they know what's going to happen, they are lying. No one, like literally no one on this planet can actually predict even the next hour, right? So it's absolutely ridiculous to be able to say that you know what's going to happen. And however convincing that person is, no chart astrology, no blockchain astrology, nothing of that has any kind of proven predictable power, right? It's absolutely ridiculous to believe that. So all you can do is you can sit there and you can look at various possible kind of outcomes. You can put percentages on top of those, and you can just say, hey, look, if that's going to happen, that's the next step that I'm going to do. And so the thing that I just would kind of highly recommend you to watch out for, obviously, is tomorrow's announcement on the Fed. Here's a key thing. If there's really only a 50 basis point increase, the markets could actually rally really hard because I think at the moment, especially yesterday, markets priced in a 75 basis point. So if you sit here and you're like, oh my goodness, I'm so glad that I'm in dollars and tomorrow's just going to be horrible. Well, don't be caught on the wrong foot. I think people who are either all in crypto or all out of crypto, generally these two types get slaughtered massively. So just be careful on if you're feeling like you're good just because you're completely out of crypto. So that's just something to watch out for. Obviously, we need to watch the situation around Celsius and we need to watch any kind of secondary consequence here. It does not look like, and it's very unlikely that Tether has issues. And yes, Tether and Celsius has this really strong kind of bond, but it's very unlikely that anything is happening there. So it could be more that other crypto lenders maybe got exposure and now they have issues there. Maybe Celsius has no issues. And in a couple of days, this liquidity crunch is over and they're like, yeah, sorry guys, for all this. I mean, I know we probably lost a lot of trust, but all your assets are actually there. We have no issue. We just had to cover them. And there's a very likely chance it's actually happening. And then no problem, right? Obviously, it can also be worst case. And I've seen some crazy stories, right? I mean, let's kind of flip both stories. One story is let's talk let's talk in their favor, right? And again, these are all just stories that you see on social media that people try to back up with facts that could be completely wrong, could be completely right. So one of those is they have to kind of meet those margin calls, someone FTX, someone Maker. So they don't have the funds themselves anymore. So they need to have customer funds. So they lock withdrawals, take those customer funds, and back up their collateral to avoid any kind of margin call, right? Sure. At the end, I mean, it is in the interest of all the customers because otherwise they would have a margin call on that and they couldn't meet that. So that's kind of the easier side of things, right? The really terrible side of things is if we go and we really look at their accounting, and they've done accounting where they really kind of based their own token Celsius at I think $8 or something, and they pumped up the entire balance sheet with this and just said, "Hey, look, we have this really strong balance sheet," and they kind of disguised how much of their own token actually supported that balance sheet, and that's I think Laura Shin from Forbes had that kind of release today, where she kind of retweeted that, and I saw it. I was like, oh my goodness, like that's really some yeah, I think that's really really tricky, right? To do that, and again, I'm definitely not a financial expert, but if they truly did that, the question between like how much there is a bit on the fraudulent side versus how much is just bad accounting, I think it's very difficult. And so, I mean, we don't have our own company token. We wouldn't have any issue with that. But if we are actually just in a process of finishing, and I hope we actually in one of the next kind of updates, we actually can really announce and maybe even share the PCAOB audits for 2019, 2020, 2021. We're really in the final stages there. But when we can show that, I mean, our auditor would never sign off on something like that, right? If we would take a company token and just pump that thing, it's absolutely yeah, incredible. And I always tell our team as well. I say, look, we have about 4 year runway, and out of that runway, if we had no more revenue, out of that runway, not a single dollar would be dependent on DFI price, for example. All of that doesn't even depend on crypto prices, right? That runway is completely dependent on the US dollar. That's it. And that's just because our expenses are in dollars. So that's what I base this on. So all of this is completely independent of crypto. So it doesn't depend on a DFI price, doesn't depend on a Bitcoin price, doesn't depend on an Ethereum price. It just depends on dollars. And in my opinion, that's the only way how you as a company should represent yourself, unless you want to represent yourself as something that is maybe a bit better than not. So again, that's something you need to watch for, right? This can be really ugly. It can be nothing. Then obviously you're going to have these liquidation levels. You're going to have emotional levels, right? I mean, sure, there's nothing special about Bitcoin actually hitting 20,000. If you were a bot, right, you wouldn't care about whether a price hits 20,000 or 21,387. It does not matter. But as a human, you're emotional. So 20,000 is an important level, especially also because it's close to an all-time high. So if the price were to drop below 20,000, I don't know, I think a lot of people would get a bit more emotional, be like, oh my goodness, that's it. That's the end of the world. So these if-then scenarios, right, are just really, really careful to be watching on the downside. But that obviously also brings the flip side. If the 200 moving average actually holds on a weekly basis, the Fed comes out with 50 basis points. Celsius says, hey, you know what? False alarm, guys. Sorry about this. We did have a bit of a liquidity crunch. Let me explain you what happened. We didn't want to reveal the blog posts because we were attacked by this and this and this and this actor, and we didn't want to reveal our next steps, so they couldn't put extra pressure on us. So now all good, like no foul, no harm. So or no harm, no foul. And yeah, withdrawals are open again. Sure, a lot of people are going to withdraw funds, but at the end, it's all good. And you would see, I mean, the market could easily actually jump over 30,000 again from here because there would be this massive relief rally. So just really be careful at the moment if you make these really strong conviction bets into one direction that are very emotional, that you don't really base on much substance. You should really have a good kind of if-then playbook, and then you should be absolutely fine. I think it's going to be a very interesting time where we're going to be. I have very little opinion actually at the moment if we're going to go lower or if we're going to go higher. I do believe from an entire gut feeling that we are really, really close to the bottom for the simple reason that emotions for many, many people are really kind of through the roof. A lot of people are really hopeless right now. People think there's no more turnaround. Yeah, we're getting there. The only question, as I mentioned, is when is the actual turnaround going to happen, right? And I mean, we can now start doing the 20,000 game that we did for the 30,000 game for 2 months, and we can do the 20,000 game for 3 months or something. And then let's say we go down to 19,000. That's not much down from where we are right now. So it's still basically the bottom, but it's going to drag out for another 6 months. And then, yeah, that's just where you're not allowed to lose hope. So just keep that a bit in mind. Um, yeah. Fabio, anything from your side to add here?
Maybe something funny to finish off on, or something funny. You were
On a
talking about
positive note, basically.
on a positive note. On a positive note,
Yeah.
you were talking about high conviction bet. Guys, today is full moon, and and there is.
I was like, where is he gonna take this? I would have never guessed you're gonna come up with the moon theory.
No, I really enjoy reading up on this a little bit because I know for a fact that you, Julian, are big fan of technical analysis and all this technical data. Joking here, I was looking into astro technical analysis just for fun. And
Oh
it's
my
kind of
goodness.
amazes me that there is like moon cycle analysis where you have full moons and like springtime where the water is at its highest, and a whole theory behind this because human beings are 75% water and everything. And today is full moon, and I think there is a few Astro TA people here on Twitter. They have like several 100,000 followers, so this is actually a thing. I'm not making this up, and they are calling for 14, 15 July since the beginning of the year, June, 15th of June, 14 and 15th of June. So right now. And so this is a conspiracy theory. This is not financial advice, but there's just a few things coming together right now. So we talked about this in the beginning. You had the old all-time high. You have the 200 weekly moving average. You have full moon. You have the Fed meeting. You have liquidation levels of the biggest company in the space. So Microstrategy and Celsius are like the biggest institutional holders. So all of these things are kind of converging right now. And also, if you look at history, we were like, if we were breaking the 200 moving average, we were dropping down to the 300 and instantly recovering from there. I'm not saying this is going to happen, but there might be a chance. And hey, full moon. So let's just make the best out of it.
Okay, that is a nice ending. Yeah, and last but not least, obviously, if you are a customer that wants to have a platform that you can rely on, that's completely transparent about how stuff works, where rewards are coming from, then check out cakedefi.com and yeah, become a customer. Also, if you want to have a safe haven as a job in the crypto industry, a company, we're still cash flow positive at the moment. Like even though prices dumped, we've had, yes, I know we've had massive margins before. Now you know, but that's how it is. We're still cash flow positive. So at the moment, no need to tap into our reserves. But if we had to, we had 4 years of reserves. So very good cushion. And if you want to work for such a company, please go to cakedefi.com/jobs and join this wonderful team. Other than that, I hope that gives you a bit of confidence, a little bit of hope, a little bit of a smile, a little bit of an inspiration, and you tune in and join us again next week at 6:30. All the best. Stay safe, stay healthy, stay cool. And yeah, let's hope we see the 30,000 on Bitcoin again soon. It's incredible that I even say that. I think 6 months ago, this would have sounded absolutely nuts. But yo, with that, all the best. Good rest of the week. Bye bye. Thank you.